Hi, I'm Mike Larson, Editor-in-Chief at The Money Show, and today I'm here with John Buckingham, Principal Portfolio Manager and Editor of the Prudent Speculator. John, welcome to the show.
Thanks for having me.
Okay, so we're in this really exciting environment, but there's also a lot of questions when it comes to the market, where things are going, is recession a worry, is the Fed going too far, and so on. Can you talk a little bit about the macro view here in the Las Vegas Money Show and what you're seeing in the markets?
Sure. Well, I wish that we could all forecast the economy. You know, economists can't predict the economy. So as long-term investors, what we can do is we can make sure we keep our emotions in check, not succumb to the gyrations that seem to be accelerated these days in the market. So we try to focus on what's happened historically. Yes, there could be a recession, but if there is a recession, history shows that's not reason that long-term oriented investors should be selling their stocks, especially as the time when you emerge from recession is so favorable for equities. Value stocks, believe it or not, on average have had a 41% one-year return coming out of a recession.
Yeah, I mean, absolutely. You know, the long term is extremely important. You've been in this business for decades, so you've seen plenty of market cycles. What do you see out there that, you know, in this one that's different or similar to what's happened in the past?
Well, it's always different. You never step into the same stream twice, but you can look at market history as a guide. So if you look at periods of higher inflation, and if you even go back to the Volcker period, which is the last comparable time when the Fed has really had to fight inflation, equities did extraordinarily well from 1979 to 1984 or so during the Volcker years. Believe it or not, again, value stocks had a 25% average annualized return during that period, and there were two recessions in there. So again, long-term investors need to take the ups and downs in stride, but over time, equities will prove rewarding. The secret to success, as they say, is not to get scared out of them.
Absolutely, and I know you do focus on value investing. Are there particular parts of the market that you see, you know, offering great value here? I mean, again, given people are worried, they sell stocks irrationally, which creates value for other investors.
Right. Well, again, as a long-term oriented investor, I like to plant seeds. I like to buy things that others are not interested in, because inevitably the cycles change and they will become interested in them. So what's gotten beat up a lot here of late are financials.
Sure.
You know, regional banks have been absolutely destroyed. Now, they're not all created equal. You know, the deposit base is not going to walk out the door, at least in my humble opinion, at a company like Fifth Third Bank, which has a very low level of uninsured deposits and actually marks their loan book and their asset book to market. So there's not this hidden loss on the books at Fifth Third. So I think that's an attractive name. The insurance companies have also been hit really hard. So something like Prudential Financial is attractive. And then, of course, the beneficiaries of all the banking mess are the big banks.
Sure.
So JP Morgan, Citicorp, and Bank of America would be very attractive as well.
Got it. So FITB, correct, for Fifth Third,
yes.
Prudential, PRU.
Correct.
And then I think most people probably know, but C, BAC, and JPM.
JPM,
right?
yes.
Perfect. Outside of financials, anything else that you find particularly compelling here?
Well, again, people are very worried about the health of the economy and worried about that we will have a recession. So economically sensitive stocks have been hit kind of hard. So something like Whirlpool. New home sales have held up very well despite the rise of interest rates. Whirlpool's continue to generate fantastic profits, and yet the stock is not unloved and really has gone nowhere. In fact, it's reported great earnings just today, and the stock was up in the after hours last night after the announcement. Today it's down significantly. So something like Whirlpool would be attractive. Even something like, if I know it's tough to go out and buy retail, but something like a Foot Locker or a Nordstrom, those two also look very attractive. Foot Locker is FL, Nordstrom JWN.
Okay, and Whirlpool WHR, correct? Okay. Any last words that you'd want to pass on to people watching this today? I mean, again, whether it's about your market view, some of the sectors you see value.
Yeah. Well, again, I'm a long-term oriented investor, right? There are a lot of ways to invest. What I find is that if you can be consistent and disciplined in your approach, whether it's value, whether it's growth, whatever style you like, as long as you stick with it, generally speaking, you'll do well. Now, you also want to make sure that you're timing your horizon to the pool of assets that are committed to that particular asset allocation.
Got it.
So if you have a 5-year time horizon, you can be in equities. If you don't, then you shouldn't be in equities.
Got it. Perfect. John, thank you so much for your time. Thank you, everybody, for watching. This has been Mike Larson from The Money Show, Las Vegas.